The secret of success is to do the common things uncommonly well. John D. Rockefeller. My friend, our common things that we do uncommonly well is to follow these markets 10 to 15 minutes a day, each and every day. That is the key. Learning the nuances by following the charts each day. It only takes 10 to 15 minutes, but my friends, the key is each and every day, these markets are open. At the most, that's 5 days a week. This week, it's only, 3.5 days, really. Markets closed early on Friday. Stock market closed early at 1, bond market at 2. And we, of course, are bringing you these charts. This is our weekend review, okay? This is where we look over what happened this last week and where things might be going in the coming week, what these charts are showing us. I hope that you are filling out your weekly market worksheet. That is extremely important for you to fill out. Why? Because it helps you see what's going on looking at the week over time. Looking at this week, comparing what happened on the current week that's ending and the new week that is beginning. Of course, you keep each of those. You don't just fill this out one time and throw it away. You keep it in your stock trader's almanac. You keep it so that you can look back and see what you have learned over time. You note your lessons there. You pay attention. It's the same reason you fill out the trade worksheet and then the daily market worksheet. That is Tuesday, Wednesday, Thursday, and Friday. And then it's over the weekend, the Monday edition, that is the weekly review that we record after the market closes on Friday. That's the one that you fill out the weekly market worksheet for. At the end of today's video, I'm going to have all 3 of the trainings on how to actually fill out and use those worksheets. Those are available for free in your show notes. PDFs are there every day. If you're not a subscriber, go to chartingwealth.com. Oh, and don't forget, coming up this Wednesday, the 2nd of December, we are going to have for our Patreon members at any of the 3 levels, the live question answer call-in session. If you're a Patreon member, go ahead and start emailing us the stocks and ETFs you're interested in having us help you chart and do backtracking on and such for your practice trading. In addition, we want your questions. And again, if you're not a Patreon member, we have 3 levels. We very much appreciate your support. First thing you'll get when you sign up as a Patreon member is you will get the 3-part series. Again, our favorite options made simple, the Charting Wealth way. Let's jump into these markets. We see on Friday, stocks and bonds, crazy enough, are all going in the same direction, all up. Not up a huge amount as far as the S&P, but the Nasdaq 100 up 0.92%, bonds up 0.97%. Gold is our real downer. Gold has had a bad week. I mean, remember, folks, it peaked back when gold was going to go to $15,000 an ounce. It peaked. That was all the way back at the first full week in August. And it has been doing nothing much but going down since then. So if you shorted gold, you bet on it going down, you've been doing quite well. That's what our charts have been showing us. Now, let's first start with the S&P 500. We ended up with an up week. Now we look at where things are. We see that the high, 164.18. What was the high when we crossed over going up at the week ending the 13th, Friday the 13th of November? The high was 364.38. So 364.38, 364.18. Not quite hit that high yet, but we have finished drawing our candles, and we will continue to chart as the market struggles to move higher. Again, not much up for the day, 0.28% in this shortened trading day. Derivative oscillator heading up, price percent oscillator pulling away from the red signal line. So what does this tell us as far as the weekly chart goes? Continue to watch and see. The market just is not moving above the prior high for that week ending the 13th of November. Has it hit a ceiling? Is it going to crash in the near future, or is it going to continue to just push forward and try to move up? We don't know. That's why we're paying attention to these charts, seeing what's going on, and letting it lead us. Now let's go to The 2-day chart, what do we see going on there? Well, we see that on Wednesday, we had things move up quite nicely. The 2-day chart moving up, and we need to, at this point, redraw the 2-day candle. And we can see where things, I'll tell you what, we're going to draw it on that last one, where things then on Friday tried to move up. Did they move higher? 364.18 compared to 363.81. What we're looking at is the box over here. I can't move from the right side to the left side, but if you look, not at the cursor, but to the left side of the screen, you'll see at the top the date. You'll see SPY, and then it shows you the open, high, and low. So that's what I'm doing. I'm comparing high to high. And we see the price percent oscillator continue to move up, derivative oscillator losing some momentum. So again, we're above that 2-day trend line, well above the weekly. We look at the half day. And what's the half day? Has it crossed over? Yesterday, if you remember yesterday on the prior day that the market closed, remember markets were closed on Thursday, but what we saw on that prior candle was it did not cross over. If you'll look in the next to last box at the bottom, starting with PPO, it shows that the PPO did manage just barely to move higher than the average 8, which is the exponential moving average 8 period. So it did manage to finally push above. It was up in the morning and slowed down in the afternoon. So the derivative oscillator is heading up. Price percent oscillator just barely crossed over, which means, of course, we will now redraw the trend line since we've technically had a crossover. And we'll see just how much longer things will continue to move up. So again, pay attention to these charts, particularly with that weekly. See if we're going to hit our head on a top, on a ceiling, and roll over and go down, or if this market is going to gain some energy and move back up again. We don't know at this point. That's what we're waiting to see. Now we go from the S&P 500 to the Nasdaq 100. The tech stocks did not manage to cross over, so we're still negative there. Price percent oscillator still below the red signal line, and the derivative oscillator still negative, losing downward momentum. We did have a week hitting a higher high than these prior weeks. So again, we see that the high was $300.17. If we go back in time, how high did we get previous? Oh, to 303.50. So we go back to September, and we don't see things getting as high yet as they did. And this derivative oscillator and the price percent oscillator still negative on the weekly chart. Go to the 2-day, we can see where things were a booming up, 0.92% on Friday, pulling away from the red signal line, derivative oscillator gaining upward momentum on that 2-day chart. What about the half-day chart? Of course, we can redraw that now. And you know the beautiful thing, those of you who are wondering, what kind of platform is Tom using? I am using TC2000, the paid version of freestockcharts.com. If you go subscribe, you'll see a link in your show notes. It'll save you $25 if you use our link. And also, you can use the link we provide in those same show notes to get the exact background that we are using, the exact trading, well, not only the trading platform, but the charting platform that we use. That is available for free to you also. Encourage, if you're serious about learning how to chart, you need a serious charting platform, and TC2000 is as good as it comes. So we see up in the morning, not quite as high in the afternoon. And again, remember, what was that afternoon? It was about 15 minutes, because the half-day chart is, of course, it goes until 12:45, and then, of course, what do we see in the afternoon? That goes up till, again, the market closing at 1. So we see that the price percent oscillator continuing to head up, derivative oscillator gaining upward momentum. Now, that's where we are on the cues. So again, what are we looking for? If the market consolidates, continues to push up, maybe over the course of this next week, we'll see the price percent oscillator crossing over going up. Maybe it won't. Maybe it will fail. That will be predicated by the 2-day chart crossing over going down. It'd be a recross going in the same direction as the weekly chart. And then, of course, we would know the party is over, and we would expect things to then trundle down as that 2-day perhaps pulls the weekly down. But we don't know. That's why we are waiting. The good thing about being a chartist is, and not a trader on Wall Street where you have to trade, you have to move inventory. We don't have to do that. So our first rule of trading is don't lose money. Second rule of trading, make money. Now let's leave stocks, go to bonds. And bonds were up for the day, although on the weekly chart, still negative. Price percent oscillators flat. Derivative oscillators negative, losing downward momentum. We can see that the candle for the week is an up candle, not reaching a higher high than the prior week. And again, we still have that downward pressure on bonds. We go to the 2-day chart. What do we see there? Well, we see that that 2-day chart is again continuing to move up. First, when we look at this latest 2-day candle, it's a green open box candle, price percent oscillator heading up, derivative oscillator gaining a little upward momentum. Prices above that 2-day trend line. Go to the half day. That's where we see things up in the morning, a little further up in the afternoon. Didn't cross over yet. Now again, we'll continue to watch and see how bonds play themselves out as we move along. If stocks crash, then of course we would expect bonds to zoom up. If bonds don't, then we would of course expect, if stocks continue to move up, then we would expect bonds to move down. Now, lastly, we're going to go from 20-year bonds to gold. And what is going on with gold? Gold is hammering down. As I said at the beginning of the show, when gold peaked back on the week ending the 7th of August, it stopped, and things have been rolling down since then. And this was one of the biggest down weeks, I guess the biggest we've seen so far. Price percent oscillator is just trashing over going down. Derivative oscillator gaining downward momentum. Go to the 2-day chart. Of course, we can see how it is just pegging off, moving down, accelerating in its down movement. Price percent oscillator moving down, derivative oscillator hammering down. And what do we see on that half-day chart? It is continuing to move down. Of course, we had that half-day crossover back on the 18th of, 18th of November. And of course, down and then up a little bit, and then of course it proceeded to, you can see where the market will take breaks. It'll move down for a couple of days, then sort of try to rally, move down for another couple of days, rally, and then move down again. So again, gold continuing to trash out and move down. Of course, those of you that jumped into that 2-day recross have done quite well for yourselves. The jumping in point somewhere around the, let's see, somewhere around the 178, 179 mark to a low of, how low did we go? 166.78 in, again, about a, 2.5 or so week period. So that's been quite nice. Of course, the way that we short gold is not by doing an inverse fund. Why? Because the inverse funds in gold are very illiquid. That is the difference between the bid and the ask. You always know liquidity of anything based upon how much you can buy it for and then immediately sell it. If there is a large gap between what you pay for it and what you can sell it for immediately, it's not liquid. If it's very close, it is. The gold is not that way in the inverse funds like DGZ. They're not very liquid. So what do we do when we want to short gold? Unlike our other 3 ETFs, which are quite liquid in their inverse funds, we end up looking to practice trading puts in gold. And again, you can learn all about puts. If you become a Patreon supporter, you will immediately receive those 3 wonderful lessons, Options Made Simple, Parts 1, 2, and 3, The Charting Wealth Way. And again, Patreon members, mark your calendar this coming Wednesday, the 2nd of December, We will have our live call-in session 12:30 Eastern Standard Time here in the U.S. All the information will be in your email, so check for that. That's where we are, folks, as we end the day on Friday. For all my friends in the States, hope you had a great Thanksgiving. And again, for all of you, have a great weekend. Thanks for being with us. We love you and appreciate you. God bless. All the best from the whole team at Charting Wealth World Headquarters.